Welcome to Trading Unfiltered. It's been a minute since we've done one of these.
That's right. It sure has.
We've been doing a lot of live stuff. Haven't done a new, just quote unquote, recorded educational video in quite some time. So, figure it's time we do that.
Yep.
It's been a good long while. But today, for better or worse, we are going to tackle a topic that some could deem boring, probably. But how important is it?
Very important, especially in our field, in our line of this stuff.
Right. So the purpose of this whole thing is filings, financial health of companies, dilution, all stuff you need to know, especially when you're looking at small caps. So let's just jump into this intro and get into it.
Hit it.
Okay. So like I said, this isn't going to be the most exciting or thrilling video, but this is the type of stuff that can separate in my opinion, a great trader versus a
Mediocre.
trader. Yeah, I mean, these are the type of little things that can really give you a significant edge, especially in these shit codes, aka small caps.
Yep. I mean, and really your edge can just be defined as how much you want to put into it.
Yeah. So when we trade stuff, we're looking at everything, right? We're looking at gap stats and daily levels, and we're looking at filings and dilution options on everything we trade.
Yep.
So
it's a big part of it, man. I mean, just like we were talking about on Friday, or maybe not Friday, one day this past week, there was a company that was talking about what were they talking? They were saying they weren't going to use some.
They took an ATM off.
That's what it was.
They took an at the market offering off the table.
Yep.
But they had a fresh S3, which is another form of offerings or dilutions that was even bigger than the ATM they took off the table. So they acted like, hey, look, we're not going to dilute our shareholders, but yes, also we secretly are much bigger than you thought.
So this wound up being a high conviction play for me.
Yep. And we use that stuff every day.
Yeah, and that was a really solid win for me this week. Although I was a little early, I usually like to be late. But anyhow, high conviction, yep. That's how you can determine, how much conviction you have on a play. I wasn't worried about that one at all. I'd let it go 15, 20 cents against me, whatever.
Yep. So we're going to jump into some stuff. We're going to try to keep it a little bit short and sweet because realistically, you could spend hours going through filings. You could spend hours, days learning about filings. There are some guys I know that trade. Majority of their trades are based around the financial health or filings of companies.
A lot of guys, man. I know that's how David trades pretty much.
And like, look, there's Hindenburg, Citron Group,
yep.
All these, short firms, I guess you would call them, or, they're basing all of their thesis and their trades around digging through those filings and financials. That's how they make their living, and they're really freaking good at it. So I ain't no Hindenburg, but I mean, we know our stuff a little bit. We know enough to create an edge.
Exactly. And that's all you really have to do. You don't have to be the best. You just have to have an edge in psychology.
Yep. So what we're going to try to do in this video, in an attempt to keep it somewhat shorter, is we're going to go through a couple examples. What we're going to do is show. So we use FlashSec. It's a company we've been using for years now to help us quickly and directly go into the financial health of companies, look at filings, and it is a massive time saver. We use them literally every single day. But I kind of want to compare and show that you can go through filings without them, but it ain't easy. And it's time consuming. And there is massive value in something like FlashSec Dilution Tracker, BAMSec. There's multiple companies like this, but we're just going to show some examples with FlashSec. But before I show FlashSec, I'm going to pull up a filing because they're all publicly listed, right? That's the beauty of these things. Companies can put out bogus PRs. They can say whatever the hell they want on Twitter, but you can't hide filings. You got to put that out there. Unless you're a China-based company. We ain't gonna get into that. So what I want to do is I'm gonna pull up a tab here and just quickly try to go through how you would go about looking up a company's filing. Like I said, they are, it's publicly shared info. So anybody can do this. It's free. But if you just go whatever internet browser you use, right, and just search SEC Edgar, this is what should pop up for you. What I always do is just click on the top link. And then you can see I've done this before because it's already highlighted. But right here, company or fund name, you click that, and then you can put in whatever. Mulan, whatever you want to call it. This is a company that's been around for quite a while. We have traded this company, I don't know how many times. Yeah, I mean, this has been a good trader for a long time because as of now, who knows what the future holds. But as of now, since this company's inception, they have been dilutive. They have screwed shareholders and investors, and they just continue to do the same thing on repeat.
They're not the next Tesla.
No, it is currently a very unhealthy company. So this is just a good place to start. So anyway,
from our point of view, company like this, they only exist to make money off of shareholders.
Yep,
and
management.
They exist to dilute themselves in order to enrich the insiders. Their profit is going to come from diluting themselves, dumping shares on shareholders.
And they make out really well.
That's all. I mean, that's all they exist for.
Yep. So, and I don't want. I'm not going to spend a ton of time going through this because this could take. Like I said, I could go into one filing. We could sit here for hours going through it piece by piece. Like I said, the point of this is to show how hard it can be to get into the stuff and the amount of time it can take and where the time saving comes in on the back end. But anyway, these are the different type of filings. I'm not going to spend a lot of time going through each and every one and what they all mean because I got another place we're going to do that. But a 10Q, it's a quarterly financial that they got to put out. They're supposed to put it out once a quarter to show their current financial health or status.
Standings. Yeah.
Yep. And they're supposed to do this, like I said, once a quarter. So 10Qs are something I've always used to dig in to look at the financial health or status of a company. So this, again, not going to go through this piece by piece, but I just want to show you guys how long these can be. And it just keeps on going and going and going.
You have it pulled up right now?
Yeah, can you not see it? Oh, it created another window. Hold on.
Oh, that's cool.
I'm sorry. It created a whole new see, this is why you're here. This is why it takes two of us, because we can't do this alone.
Hey man, sometimes it does. It just takes two.
All right, so let me go back to the top. This is the 10Q, right?
Mm-hmm.
And can you see it now?
Oh yeah.
Okay. This is how long and involved these 10Qs are. It just keeps going and going and going and going and going. And this is a quarterly report. You look in the yearly annual reports and it's even longer. So this thing here is massive. So if you wanted to dig through this and find the financial health of this company, I want you to think about how long that could take. Right? Now you could go through this line by line and look at all their assets, their liabilities. You could go through piece by piece, page by page. Let's see how many pages this is. 48 pages.
Who wants to go through 48 pages?
Filled with just massive amounts of numbers and legal jargon and bullcrap that most people either don't want to read or can't get through effectively. So, and again, you got to, go to SEC, Edgar, you got to pull up the company, you got to pull up, and this is just one form, right? That's just the 10Q. So there's other forms, there's 8Ks and other S3, and I'm going to talk about what all those are, but that's just one 10Q from that company. And I'm not saying there's value not to be had in that, even if you have a something like FlashSec. There are still things you can find in these filings that are very effective. And actually one I wanted to pull up here, and I know this might be kind of hard to read because we tried to do this earlier, but this little thing here, this little tidbit was in their filings. And I'm just going to read it in case, because I know it doesn't come through great. But this is from their latest 10Q. I don't know how long this company's been around. It's been at least, 5 years, give or take. It's been, because we've traded this so many times. But in one line of their 10Q, it says, this company has not generated revenue to date and has accumulated losses since inception. The company's ability to continue operating as a going concern is contingent upon many things, including its ability to raise sufficient funds and additional capital. And how do you think they're going to do that?
Yep,
right?
They're going to dilute it.
They ain't making money. They've said since inception of the company, they have had no revenue.
This company is fully diluted.
$0, zero revenue. So again, that's just their 10Q. But that little tidbit there, unless you scour through pages of filings, it can be really hard to find that type of information. So this is one thing I had made many, many years ago that I still use and find value in. I made this, I don't even know when I made this. It's been a long time. But it's just a quick little document, and you can screenshot this, you can watch it back, whatever. But because the filings can be so hard and confusing to go through, these are quick little notes I made just to help me get through a filing. And I'm going to tell you right now, if you're going through those filings that are 50 pages long, that right there is your best friend.
Yep.
Control F. It helps you find keywords like revenue, operating expenses, cash on hand. You can look for keywords like offering, warrants, all these different things. Let me scroll down just so you can see the bottom of it. But these are all things that I've kind of just learned over the years from other people, through experience, through trial and error, through learning, through digging. Like this right here, this is old.
That's what you need to know. I mean, we always talk about these different underwriters.
Yeah.
And
this is
Wainwright,
from, I think I made this document in 2018.
Yeah.
And it's still valid.
Oh, it's 100% valid, man. I mean, you can almost tell the feel of an H.C. Wainwright rigging. You know what I mean?
Yep. So if you ever go into filings and you see Jeffries, Maxim, H.C. Wainwright, like, you got to know that this company's not in great spot, and they're going to use those underwriters to help them raise some cash on the backs of their investors, if you want to call them that. I'd prefer to call them shareholders because I don't think anybody's really truly investing in that company.
No, there's no. I mean, unless you just really don't know. I mean, the kind of guys that you see on FinTwit, on StockTwits, on the Webull message boards, on Reddit, whatnot. The people that are like, I think this is the next one. No, it's not.
Yep. And that was the thing with Mulan, is like it was getting pumped so hard on Twitter, so hard on FinTwit, StockTwits, the internet. Like Mulan was getting pumped hard, and it has done nothing but go down.
Oh, I know. And I was still working construction, traveling around when I was trading too. But man, there'd be people out on job sites talking about it. This is the one. This is the next one, and I was like, you guys, no, it's not.
No, not at
I've
all.
been shorting it since back then. I've longed it before too, but not because I believe in it, just off of technicals.
Right. Yep. So, okay, so we kind of covered a little bit of how to get into a filing at the very least. You got to go into SEC Edgar. You got to pull up the ticker. You got to, and then it has all the filings, the 8Ks, the 10Qs, the S3s, the F3s. Like there's so many different things and it can be very confusing. So I'm going to tell you one thing right now is we are not going to spend the next hour going through each and every filing and what they all mean, because that would make this a longer video than anybody would want to watch.
Yeah, and really, who really would want to watch that? Exactly.
Yeah.
It's so much quicker just to go read it for yourself. You're gonna take it in a little bit better.
Yep.
I know I would.
And this is another reason I like FlashTech is because this is their website, right? flash-sec.com. This is who we use literally every single day. But when you go to their main page, this is it. If you go to education, oops, I need to share
pull it up.
See, again, this is why it takes two. All right. So this is their main page, their homepage, their whatever landing page, if you will. And one thing I would recommend everybody go into is if you go to their education spot here, you can spend your entire Sunday, Saturday, whatever day of the week you want, going through this piece by piece. Because as you can see, it's a lot. This is a lot of information. And then in some of these things, like S3s, you can click and it goes even further into explanations. So there is a ton of information here. But this information is so key when it comes to trading small caps, specifically, in my opinion. Small caps and dilution options and financial health of companies. And
I mean, this right here is going to tell you just how toxic that dilution really is. Just how bad just how dirty they're going to be doing people. If that's the best way to put it.
Well, we'll show a couple of examples on how they've done that, but a couple key things I want to call out that I think are very key for small caps, and that people that have FlashSec or use FlashSec or might use FlashSec for, you're always going to be wanting to look at S3s. That's a big one. We'll show why. Same with at the market. These are both forms of offerings, oftentimes dilutions, and it just can tank the stock price like that. The chart can be going up, 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 offering straight down.
What would you say? What would you say the worst or most toxic form of dilution is? An ATM?
Yeah, ATM. I mean, they can just drop that ATM whenever they want. Sometimes they can piece it out little by little, or they can just drop the whole thing.
There's several I've seen this year where it was like, a stock running hard, like going parabolic, and they drop that ATM and it literally halts down the other way in half a second.
Yep.
Think about. Bad. That's the thing. If you're a long bias trader and you're long on something like that, you're buying it on an uptrend. That's why with certain technicals and things with companies like this, it just might not work as far as longing goes.
Yep. That's why I'm afraid to long these things. And I know there's an edge to be had on the long side, but it's this type of stuff that.
Well, you know how I long these. I don't chase them up.
Right. Yeah.
I mean, sometimes I'll add, on one going up but that we'll get into that that's a whole nother deal. Most of the time, I'm longing these off of a technical standpoint at a certain spot with predefined risk. Yep. In my opinion, that's the only way to trade these on the long side. The edge to be had, in both of our opinion, on these is on the short side.
Yep. So S3s, vital. ATMs, as we call at the market, ATM, vital. Another piece I've always found to be very vital is warrants. And they do too, because if you click on warrants, they dive into it pretty hard. Because there are some really, really key Twitter and FinTwit, Stock Twits, whatever. When companies have warrants on deck, those that truly believe or are pumping these companies will act like warrants are not a bad thing. But the majority of the time, they are a bad thing. A lot of times they're just given warrants are just given out to these insiders or to these investors, and they can just exercise their warrants whenever they want, and then that creates shares, and it's dilutive, and it can tank the stock.
You're just
So
yeah. It's the same concept as the Federal Reserve printing money.
yeah, it's a
It's
good way to put it.
when the Federal Reserve prints a bunch of money, it makes your dollar worth less.
Yep.
Not worthless, but worth less.
Yep. So one thing I was going to show, um, before I'm going to show a couple flash tech examples, but I wanted to touch on warrants a little bit more because there's a major misconception that warrants are not dilutive. Warrants are not bad. Oh, they're given to good people. They're given to people who are helping this company. No.
No, they're not.
So I have a couple of examples that I wanted to show. Or I say examples, but things that are more like, let's see here if I can get it pulled up. I can. Sorry, technical difficulty. So warrants, I just wanted to show this real quick. This just gives you a quick idea of how warrants are even executed from a market perspective.
Oh yeah.
Right. So warrant holder contacts their broker. Let's just use Trade Zero as an example. And they want to exercise their warrant at the specified price. They can do that. The broker's clearing firm contacts the company, and basically they convert those warrants into common stock, and the company gets money for that. And then the broker, the issuing company, it's creating new shares, and it just continues to go full circle. It's 100% dilutive. Like, warrants are trash, especially 90% of the time, especially when it comes to small caps. They're trash. So one other thing I wanted to show, this is just one example. I could pull up 1,000 more like this. This is just a good one. I remember this stock, CANF. This had a pretty major run up back in the day.
Oh, I've traded this one a ton.
Yeah, so this was one that was pumped really hard at one point in time. But this is the effect that warrants had on the stock.
This is called like Can Fight Bio or something like that.
Yeah, something like that.
Yeah.
So this stock saw a 42% decrease off its highs when the warrant offerings was triggered. Oh, December 22nd, 2021. So it's been a couple years. But it was due to an increase of supply, increasing both the outstanding shares and the float. So they're just diluting the stock, and the stock is just tanking as they're exercising their warrants. 42% decrease in one day, just from warrants. This isn't an offering per se. This isn't an ATM per se. This is strictly from warrants. Like, I'm not saying warrants can't be healthy in certain situations with quality companies. But with these shitcos, these small caps, these warrants are trash. Typically, 90% of the time, it's just the way it is. Like, it's just not good companies, man.
Think about it like this: the edge to be had with the insiders is dumping shares on you. So, whose side do you want to be on?
Right. So, again, we don't want to spend a ton of time going through each and every single type of filing and what they all mean piece by piece by piece. That would take a really long time. I tried to call out a few key ones that I think are very important. Like I said, you go to FlashSec and you pull up this education piece, right? Do that. This isn't a super long read. It's just definitions. But just by reading these definitions, it's going to help tenfold with your understanding of what these all mean and what they are. And the ones that are, in my opinion, very important, like the S3 and the ATM, they give additional information because they also deem them to be very important. So it's just something that isn't super fun to do. This isn't our most fun video we've ever made, but it's just something that I think is so important. And this is what could be a major separator of, like I said, a great trader, a good trader, potential opportunities, huge opportunities, like huge edge to be had here.
And that's the thing I was kind of talking about earlier, man. But I've always, I say always, since I've been serious about trading, since I've been trading with an account over PDT, uh, I've been long and short, but mostly short biased. But I used to do a lot more longs, and I can't tell you how many times I'd be longing something, with an open S3 or something like that, big size. I'm talking $5 company, and I got 10,000 shares and get dumped on. Lose $5,000 in half a second.
Yep.
You've got that. Even if you're a long bias trader, you don't even have to be short bias. We're not saying you've got to be like us. Even if you're long bias, if you're trading something long with an open S3, whatever, and it's running whatever the type of dilution possibilities there are, to tread lightly.
Yeah, that's a good point. You can be long biased, but definitely keep an eye on that type of stuff. So if they have an option to just completely tank the stock or create a downward trend on the flip of a coin,
exactly.
It's just because not every small cap has dilution options in their back pocket. But when we create watch lists on every stock we trade, we look at FlashSec for every single ticker we trade. Every single one. We had a video we posted that showed the little hotkey in DOS that we can just quickly have the ticker pulled up, click FlashSec, and it takes us straight to the web page in 2 seconds. Hugely important. Look at it every day. But again, this is why I love FlashSec in this example. So we pulled up the SEC filings of Mulan, right? 50-page document for their quarterly financials. We know they're not healthy. And if you would have went through that 10Q on your own, you would have known that too. But that could have obviously taken a long time, even with the Control F of finding keywords. Oh, I didn't spell it right, did I?
MULN.
So this is FlashSec's page, right? You put in a ticker. This is what it pulls up for you. The first thing you see is share structure. So you can see what their current market cap is, what the float is, institutional ownership, all these things that we as traders deem very important, right? Any piece of data tracking I did, I tracked market cap, I tracked float, I tracked institutional ownership, I tracked all those things.
And that's just tip of the iceberg data tracking.
Yeah.
You can get so much deeper than that, but shares outstanding, market cap, float, whatever, the IO, institutional ownership, this is all going to play in so heavily on the way that this stock trades and moves.
Yep.
And
so
what you can expect.
There's websites out there like FinViz, for example. That's one that a lot of people know that is free to use, and they have financial information about companies online for free. I'm not saying FinViz isn't a good resource. I'm just going to say, though, and I would stand by this, it is not as accurate or up to date as something like FlashSec. For example,
Totally agree.
FlashSec has already put in here that Milan, just this month, has done a 1-for-20 reverse split. The reason they did a 1-for-20 reverse split is so they could stay listed, because they're a crap company. They were trading at 20 cents a share or something.
26 or 23 cents. They did the split so they can regain compliance with the what are they listed on NASDAQ?
Yeah, so you got to stay above $1 for X amount of time to stay listed. So they did a reverse split. Actually, 1-for-25 reverse split. So they did that so they could stay listed. But anyway, if you scroll further down, and this is one of my favorite things about FlashSec, the financial information piece, right? It shows all sorts of stuff, cash on hand, what their burn rate is, which every time I look at this blows my mind. Biotechs have crazy high burn rates. Mulan trumps all of them. That is a crazy high burn rate. That's basically how much cash they are burning through every month to stay operational. That is absolutely insane. Their estimated months left of cash, they're broke. They have none. And I can tell you, because me and sellers looked at it briefly before we came into this video, we looked at their most recent filing from because this 10Q that they have listed on their website is from February. Well, Mulan just put out a new 10Q last week. So I'm sure FlashTech next week will ingest all that information and put out the new financials. But their current, right, this is one thing I like. Current assets minus current liabilities gives you your working capital.
And it's negative.
Right. And this is from February. I looked at it in May, right? They just released their new one in May. It's still negative. It still sucks. They still have no recent current working capital. Yes, they have assets because they have factories. They have some buildings and some resources. That doesn't mean they have money. So,
and those kind of assets are really just liabilities.
Yeah, I mean, if they close right, they might not be able to sell the factory in the current environment. Who knows?
Exactly.
So, huge edge to be had in just these two pieces. You get a quick snapshot of share structure, literally in seconds, and you get the same, literally in seconds, from the financial information. You would have to go through a 10Q, and it would take me. I'm pretty decent at getting through 10Qs now because I've done it enough times, but it would still take me probably about a half hour or so to control F all these things, get these numbers, do some basic math, figure out things like burn rate, figure out things like working capital, figure out how much money they have left. It would take some time to do all that.
Exactly.
But I click FlashTech, I type in the ticker, and in seconds I have all this. And then warrants that we've already said are complete. With these shitco companies, they are dilutive options for the company to raise cash on the backs of shareholders. They've already exercised these. Guess where their stock is currently trading after the reverse split? Right around this level. After the reverse split, Mulan is now back trading right around that level, and they have warrants that they can use. They probably have a bunch. Sometimes it'll tell you exactly how many they have. But they have warrants they can exercise at that price. And some warrants, this is where you read into the filings, some warrants, they have to be redeemed at $1.27. There are other warrants that can be redeemed up to $1.27, but could also be redeemed at $1 or 90 cents or 80 cents or wherever the hell they want to redeem them. But it can only cap at $1.27. Note to self. And these are the S3s that we talk about. S3s, warrants, ATMs, those are all the key pieces that we look at for all these companies. I'm not going to go through this piece by piece because this would take a long time because there's different forms of S3s. You have secondary and primary. Primary is worse. Primary is raising money and also diluting. Secondary is not creating more dilution. It's not adding to the share count, but it is still going to kill the stock price. It can very much negatively affect the price of the stock, but it's not going to create more shares. However, FinTwit, Twitter, StockTwits, they'll be like, oh, all these S3s are secondary. It's not bad. It's not bad. No, it's still bad. It's still bad.
It's always bad.
Yeah, especially when you see this many. They have 1, 2, 3 currently open. 2 they've already tapped and used, but 3 currently still open.
Go look at the good company. Everybody knows a good company. Go look at their financials and then pull up a company like this and compare the two.
Yeah, people are gonna be like, oh, and this is why I wanted to look at Mulan, because there's a lot of chatter around Twitter that, oh, warrants and secondary offerings aren't bad. They're still really bad. They're not as bad as ATMs or, primary offerings that can tank it and create additional, increase the float and really dilute the current shareholders. But this is still not good. And again, with FlashSec, so I'm going to do one last maybe little piece, and then I know we ain't trying to spend all day doing this because we could.
I could talk about this forever.
Yeah, one thing I wanted to show, because, all right, for example, right, we're sitting here talking about secondary and primary, okay? Let's say I wanted to know what the difference was of secondary and primary, right? You go into the S3. Sorry, it is right here, right at the top. I lost it. Primary, right? Subsequent offering following IPO that creates new shares, increasing the share outstanding, which can inherently increase the float. Secondary, which is what we were just talking about, and people say, oh, they're not bad. Shares are sold directly by investors. No new shares are issued. Thus, it's not affecting the float and the shares outstanding. So people are like, oh, that's not as bad. That's not as bad. Correct. It's not as bad. But guess what's going to happen when they start selling 1 million shares? Or I
It
think,
still ain't good.
yeah, I think the previous page from Milan had, close to 500,000, 600,000. It was a lot of shares. Guess what's going to happen when they start selling those shares? Right? Yes, they're not diluting the stock, but when you have that amount of sell orders coming in little by little throughout days or weeks at a time, the stock ain't going up.
It's driving that price straight down.
Right. So I picked this one out for a reason, because people like to say, oh, warrants aren't bad, or oh, these secondary offerings aren't bad. They're not as bad, but they're still bad. But that's where getting in here and digging in and figuring this stuff out and reading and doing your own research is going to help you. If I hear the CEO of Mulan come on Twitter, because he does, and say, oh, we got offerings, but it's only secondary, we're not going to dilute the shareholders, he's technically correct. He ain't telling a lie. That's an accurate statement. But when they start tapping those S3s and that selling kicks in, bye-bye.
Exactly.
Stock price going back under $1 real quick. And then guess what? They're going to do another reverse split. I don't know how many reverse splits Milan's already done. This ain't their first one. I'm pretty sure they've done more than one already. A lot of companies, this is their cycle. They run it up on bogus PRs, right? Bogus news, bogus PRs, a bunch of bullshit. And then they tap these offerings to enrich themselves, like you said, put money in their pockets. Stock price goes down, bags the shareholders. And then they're like, oh, they're not compliant. What do we do? Reverse split, which takes the share count back down. But then they do the same thing again. They re-dilute it again.
And your shares that you are bagged on just become worth less and less and less each time.
Yep. So, and Mulan's not alone. I'm not trying to pick on Mulan. Pretty much every small cap we trade is a massive piece of crap.
And that's why we trade them, because we like that.
That's our edge. Our edge is largely derived from knowing these companies are horrible. And again, to show that I'm not picking on Mulan, I'll go back to FlashSec and pull up what's another GFAI.
Yeah, okay, GFAI. All right.
This was a recent one I remember that was going crazy with the AI stuff. Oh, people are
and hey, you remember I had a solid long on this one, and I was texting you. I was like, man, I know GFAI's got to open S3. Or it wasn't an S3, it was an F3.
Maybe, which is the same thing, just from a foreign
company.
Yeah. So, and again, it's why I like FlashSec. So they had no cash on hand, but as a result of a recent cash raise, they now have money. This company had a major run up. Major. I mean, they went bananas.
Oh yeah.
And they took full advantage of that run. They tapped and look at all these warrants. I mean, look at this. These are all warrants that this company has. This is insane. That is any point in time that it gets up to these prices, these warrants are going to get hit, and the price is going to go right back down.
Imagine just being long and just getting bagged.
And then when you come down here, this tells you about, we like to use things like gap stats or daily levels to look at, we like to think the history of a stock might help determine future performance. And I stand by that. It's the same with filings. It's the same with S3s. This company has on multiple occasions done some forms of dilution or cash raises. Why would you think they're not going to do it again? They've done it numerous times. They have warrants. They've exercised them. They've exercised S3s. They're going to do it again. So, again, I wasn't trying to... Which one were you talking about? Real quick.
Just an old one, NAKD.
Oh, I remember that one too.
Traded this one a lot.
Yep. So, let's just scroll down to the good stuff. Warrants. Holy shit. Most of them have already been exercised because they had no choice. That was the only way they could probably make money. But I mean, this is stupid. This is an insane amount of cash raising opportunities. You keep going down. Yeah. ATM currently in progress.
Oh yeah.
They're going to use it.
Group. You see that?
They're going to hit it. They have 2. They've already used this one a little bit. They've already tapped some of that. They're going to keep tapping more. And they got another one on deck. Like, they've already, and this one's been completed, and this is all within the last couple years. You keep going, more. This is a great company. This is how good of a company this is. I guess they're still around.
Yeah, I guess they are.
But I mean, look at this. It just keeps going down. This is insane.
Yeah, they're just worthless.
Here's another one. This is a fat one right here, 300 mil.
Yeah.
So yeah,
I love trading that thing, man. Back in like 20 or 21.
Yeah, I remember that. That was a nice Zach Morris pump from back in the day.
Oh yeah.
All right, so I think I got into everything I wanted to get into without taking up an entire day for us or others.
and like you were saying, we're gonna leave some links to stuff in the description.
Yeah, Flash Tech will be in the link, so you can definitely check them out.
We've got a discount code for them.
There are 100% worth it, and there's other companies that do this. I've just been using Flash Tech the longest, and that's what I'm most comfortable with. But
and they really probably, I'm not trying to be too biased. They probably are better than Dilution Tracker.
Dilution Tracker is really, really good at focusing on just small caps. That's all they do. I think they cap their market caps. It used to be like 250 million. I think maybe now it's 500 million, but Flash Tech has no cap. You can look at the financial health of any company, large cap, mid cap, small cap. That's why I like
what we were
them.
talking about earlier. MULN, it used to be a mid cap,
Yep, because their market cap used to be much higher when their price was higher. So I don't know if Dilution Tracker would have had them back then. But, again, check them out. I'm 99% certain that education tab on Flash Tech is free. Definitely check that out. Like I said, we could spend hours going through this piece by piece when you're talking about 8Ks and 10Qs and convertibles and warrants, and it's a ton of information. You just got to dig in and read it. But without
if nothing else, just do yourself a favor and at least just go learn the language. Learn the terms. If even if you don't want to dig into filings, learn the terms, because sometimes these terms are in news. If you read news, it's worth it. Just to know what you're looking at and have an idea, just a roundabout idea. It's worth it to know the terms.
Yeah, and you can use SEC Edgar. That's completely free. And then that Word document I put up here for a while, you can use Control F to find key terms, revenue, operating expenses, burns, assets, liabilities. You can Control F all of those terms. However, it will save you a lot of time. But when you Control F revenues, there's going to be about 30 instances where that pops up in a 50-page document. So
read through.
There's huge value to be had with Flash Tech. So that was the primary reason for us trying to do this. Show some examples of how to dig into a filing, but then show the benefit of having something like Flash Tech in your back pocket if you are an active small cap trader. So I think that's all I got. That was a long-winded statement.
Hey, man, same with me.
But
like we said, we could talk about this forever.
Yeah, and we always say this, but we mean this. I mean, if you have questions on specific things, like our Twitter handles are there, right? Like DM us or leave a comment on the video, and we will answer your question or try to answer your question, direct you the right, and whatever. Because I know filings is a loaded topic with a lot of information. It has taken me years to get feel really comfortable with filings, especially when you're digging into the finer print things, which can take a long time to get really efficient with.
Yeah, and like you said, man, I mean, our handles are down there. We do all this stuff for free. We do our Discord room for free. We're not selling any services. We're just out here doing this because we love it, So hit us up. We're happy to answer questions, whatever you need.
Amen. So with that, appreciate y'all. Same as always, the old like, share, comment. Seriously, comments are our favorites, so we know what to do or what not to do, or do more of or less of. Maybe this video is helpful. Maybe you want more detailed information on S3s, because we could do an entire hour video on just S3s or just 10Qs. That's how in-depth filings could be.
Absolutely. I'd be happy to.
Yeah, same. So anyway, appreciate y'all. Like, comment, share. Hit us up if you need us. Links will be in the description. Flash sec will be in the description. I think that's all I got. You good?
Yeah. Oh yeah, I'm good, man.
We're good. All right. Well, appreciate y'all. Thanks for watching. Check us out. All that good stuff. And peace.
Peace.